When the 2008 crash happened, the stock market bottomed in March of 2009. So I'm just going to write this right here in March. And the stock market bottomed, the Dow Jones, at right around 6,600 points. This was the bottom in March of 2009. Then in December of that same year, 2009, now the stock market had rallied and the Dow Jones grew to right around 10,600 points. That is right around a 60% increase from March to December of the same year. When the pandemic hit in the March of 2020, our economy shut down and the stock market started to plummet. But it started in March and the stock market crash also ended in March because that was when the Federal Reserve Bank opened up their money printer with unlimited quantitative easing and they wanted to save the stock market. So the stock market, the Dow Jones bottomed in March, the same month that the whole pandemic started in the United States. But the Dow Jones bottomed at 18,500 points in March of 2020. And then by December of 2020, the Dow Jones had rallied up to right around 30,000 points from March until December, which is right around a 62% increase again in the exact same year. Let me even touch on Bitcoin because I think after the pandemic, Bitcoin started to become much more widely accepted. And around March of 2020, that's when the Bitcoin price had fallen to right around $5,000 a coin. And by December of 2020, the same year, Bitcoin rallied to right around $30,000 coin, which, if you do the math, is right around a, not dollar sign, 600% increase in price over the same March to December timeframe. Now, real estate works a little bit differently because real estate isn't liquid like cryptocurrency or the stock markets. You can't see the day-to-day fluctuations in price with real estate, and it doesn't move as quickly as the stock market or the crypto market because it's not liquid. If you want to buy a property, typically it's going to take you at least 30 days, maybe 60 days, could even be 90 days. So real estate transaction takes so much longer and you don't see the day-to-day swings with real estate, but real estate can still be affected by things like this. Like when the real estate crash happened in 2008 and 2009, real estate prices went down from 2008 to 2009 to 2010 to 2011 until 2012. It wasn't until 2012 when real estate prices really hit the bottom. Now, I was very fortunate where that was when I first started investing my money in real estate. I really kind of just got lucky with the timing because I was in college, had some money in the bank, and I started reading these books about entrepreneurship and investing, and it said that every wealthy person invested in real estate. And so I started investing in real estate. Now, I was in Michigan where real estate was hit exceptionally hard. We had Ford, GM, and Chrysler as the biggest employers in Michigan. GM went bankrupt, Chrysler went bankrupt, Ford was on the verge of bankruptcy. So the Michigan economy was hit exceptionally hard, which means that the Michigan real estate market was hit extremely hard. And so the first property that I bought, true story, it was a small 1,000 square foot condo, which just previously, a few years prior, was selling for $150,000. I was able to buy it for $8,000. That wasn't my down payment. That was the price for the entire condo, the entire investment. And then I just rented it out for $600 a month. So the real estate market was hit so hard that in some areas, real estate prices had fallen by 90 to 92%. Now, this is where everybody's trying to predict the next golden system, that if the same thing happens again, I'm going to come in and buy. If I see real estate prices fall the same way that it did last time, I'm going to come in and buy. If I see the same thing happen in the stock market or the crypto market, that's when I'm going to come in and buy. But you have to be a little bit smarter than that because, first off, nothing ever works exactly the same. We say that history repeats itself, but that's not exactly true. History doesn't repeat itself, but it does rhyme. And so what happens is a lot of people try to look for the exact same factors as before, but when something similar happens, they don't catch it. So you got to be a little bit smarter here, and you have to understand where the next opportunities are going to be. The issues that we're seeing in the real estate and the housing market today are completely different than what we saw before the 2008 crash. The issues that we saw in the stock market in the 2020 pandemic were completely different than what we saw when the 2008-2009 stock market crash happened, and the issues in the stock market today are also very different than then. And the issues in cryptocurrency are, well, always changing because cryptocurrency is such a new asset class. We're starting to see more and more regulations in cryptocurrency. So you're going to see a lot of volatility from real estate to cryptocurrency to stocks. But what you need to do is be able to pay attention to what's happening and understand where the opportunities are. Now, what I want to do now is talk about how you can capitalize on opportunities that may come our way, especially if we see an economic slowdown, to really build wealth and accelerate how fast that you can build wealth. Because, like I said earlier, recessions and economic crashes build more wealth, build more millionaires than any other time. But it's the people that understand it and the people that know how to capitalize on these opportunities. And there's 5 things that you want to pay attention to and 5 things that you want to do. And the first is you don't want to get emotional, and that's on the way up or the way down. Because the first thing is you don't want to get emotional thinking that, oh, a crash is going to happen or a recession is going to happen, so I'm going to sell everything and I'm just going to completely change my investment plan. You don't want to do that, okay? You want to be aware of what's happening and have a strategy and stick to it, and make sure that you're aware of what's happening, that way you can capitalize on it if things go down. So you don't want to get emotional. The second thing you want to do is make sure that you're prepared financially to be able to invest, because what happens to so many people is you end up in a very delicate financial situation, and then the market crashes or a recession happens and you don't have any money to go out and invest because either you lose a job, you have no savings, or you're drowning in debt, so you don't have the ability to capitalize on a down market. You see the opportunity, you just can't do anything about it. But what you can do is use a good time to prepare. That means start saving some money so you have an emergency fund. That means start paying down your consumer debt so you don't have a mountain of credit card debt or other payments that you have to make. Start preparing. Have some investment cash put aside. That way you know that if an opportunity comes, you have some money to put aside. That means making sacrifices today so when an opportunity arises, you're ready. Now, some of you might be thinking, why would I want to save money right now when inflation is so high? And you're right. Saving when inflation is breaking new records is not a very attractive thing to do. But there's a difference between just saving your money to save it and saving your money strategically. If you're saving money for an emergency, that money is not there to make you wealthy. That money is just there to protect you. And if you're saving money to invest, now again, you're saving money strategically to invest when you have an opportunity that comes your way. And if you're looking for an alternative way to save your money, then you could also potentially save some of your money in gold, especially in a high inflationary time, because when you see high inflation, then the price of gold typically goes up. Now again, investing has risks. It doesn't always go up. Sometimes you see more dips or ups and downs with gold, but there's an alternative way for you to save money. And then if you see an opportunity to go in and buy, you could sell the gold and then use that cash to go out and buy. But it's just an alternative way for you to save money. That way you have this money, whether it's in the form of gold or cash or something else, to capitalize on an opportunity, but that requires you to be prepared when times are good. Third, you want to get educated on how you want to invest your money right now. That way then, if an opportunity arises, you don't want to be the person that's there trying to figure out what you're supposed to do. You want to be ready before the opportunity is there. And the way that you do that is you start to build your strategies right now. So I talked about how you want to have an investment strategy, whether the market's going up or down. And one of the things that I do is I created a dollar cost average investing system. I already talked about what I did in cryptocurrency, where every day I buy some Bitcoin, but I do the same thing in the stock market. Every week, I have money that's being withdrawn from my checkings account and it's automatically being invested in a few different ETFs. Some of these ETFs give me exposure to the S&P 500, which are the biggest 500 companies in the stock market. Some of these ETFs are giving me exposure to growth and innovation. And then some of these ETFs are giving me exposure to emerging markets. These are countries and companies that are overseas that are growing. So some of these are more riskier than others, but it's a way for me to get kind of broad exposure to different companies and countries around the stock market, into things that I believe in for the long term. Now, this passive strategy is completely passive. I don't care if the market is going up or down. This is going to happen consistently, passively, and automatically. This way, I'm getting exposure to the investments and the companies that I want, and I'm building a dollar cost average system where every week I'm just buying more and I'm accumulating more shares in these companies that I want to own. 4, be doing your research right now. So I talked about this a lot when the 2020 crash was happening, where I had already made a list of companies that I've been researching that I want to own. The only thing that I was waiting for was a good buy price point. And so when I saw the price of these companies fall, it was just on sale. So I went in and I bought. And as it went lower, I bought more. So this is where you want to do your research now, where you start researching which companies, which investments do you want to own. Just start doing this research, spend the time doing that now, and now all you're waiting for is a good buying opportunity, and you just need to know what is a good price for you. Now, this is all about the fundamental analysis, the research, everything I talked about, right? Prepare, strategize. You need to do this investing education right now, that way you're prepared, that way you're ready, because now you're putting in the work before the opportunity arises, because if you start doing it when the opportunity is there, it's too late. you missed it. The people that are already prepared are going to be the ones that capitalize on it. So what you want to do right now, start doing the research. And if we're talking about the stock market, the easiest thing to do, create an Excel sheet, a Google sheet, just start researching companies, which companies you like, and then start crossing out which ones you don't like. You start doing your research. Which companies do you want to own? What's a good price point for you to enter in and buy? And this brings me to number 5. You got to know how and what to buy. So I already talked about my passive strategy where every week I'm investing my money into stocks, I'm investing my money into cryptocurrency daily, and monthly I'm also investing my money into physical gold. That's passive. That happens whether the stock market is up or down. It doesn't matter what's going on in the economy. It doesn't matter what's going on in the market. That will always continue to happen. But with my active money, I'm looking for the opportunities. And so now I also don't want to try to perfectly time the market, because anybody who tries to perfectly time the market misses the opportunity to buy. So what I want to do, what I did and what I look for is when I have something that I want to own, especially in the stock market, I just wait for the price to drop. If the price drops 10%, then I'll come in and buy. If it drops another 10%, then I buy more aggressively. If it falls another 10%, I buy even more aggressively. I call it drip investing, where now I just buy it on the way down in phases, because there's no way to predict when the bottom is going to be. We don't know when a recession would end. We don't know when a market crash would end. We don't know when the Federal Reserve Bank is going to open up the money printer and flood the stock market with cheap dollars. So instead of me trying to predict the bottom, I just want to buy it on the way to the bottom. That way now, if it keeps going lower, I just keep buying more, and I'm averaging my buy price lower and lower and lower as it goes down. But the key here for this to work is, again, you got to know your research is good. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.